Today in this video, we're going to talk about what is the best loan for student loan borrowers who are trying to get a mortgage. Is it the new FHA or is it the Freddie Mac loan? Check it out. Hi, I'm Rhonda Burgess, and I'm a real estate broker and mortgage underwriter here in the Nashville, Tennessee area, and my firm is Southern Living Realty Partners. I want to do this video because I've gotten this question several times in the remarks of some previous videos that I've done. You know, I did a video about a month ago talking about the new FHA changes as far as calculating your debt to income, and those changes will be in effect as of August 16th at the latest, for those of us with high student loan balances when it comes to getting a loan. And those are some good changes that are coming about. But in this video, I'm going to give you 5 reasons why I still think that FHA is not the best loan for people with high student loan balances, or, you know, you've got issues with your debt to income, okay? So I'm also going to link that video that I did about a month ago. Plus, I did a video some months back where I talked about the Freddie Mac loan being the best loan for student loan borrowers. And to this day, I still believe Freddie Mac is the best loan, the best type of mortgage for people with high student loans, or you've got issues, you've got a lot of debt issues with your DTI, okay? So reason number 1. Freddie Mac was already using, like I mentioned in my previous video, Freddie Mac was already using the payment. If your student loan payment reports on your credit report, so if you're on income-based repayment, and let's say it was $25 a month, if that $25 a month is reporting on your credit report, that is the number that Freddie Mac will use already. You don't have to wait until August. That's the number they were using already to calculate your debt to income. And remember, if your student loan is reporting 0, they use 1/2 of 1%. FHA was using 1%. Freddie Mac was using 1/2 of 1%. And, you know, like I said, these guidelines are already in effect at Freddie Mac. You don't have to wait until August. You don't have to wait until your lender gets up to speed on the FHA changes if you want to use a Freddie Mac loan. So that's reason number 1. They were already using the income-based repayment if it's reporting on your credit report, or they were using 1/2 of 1% if 0 was reporting on your credit report. The number 2 reason why I believe Freddie Mac is a better loan for student loan borrowers than FHA is Freddie Mac loans do not have a front end ratio. Remember, on your FHA loans, you have 2 ratios. You have a front end. Your front end ratio is your housing payment. That's your principal, interest, taxes, and insurance, and your PMI, your private mortgage insurance, okay? So just know that on FHA, you've got to, it normally will not let you have a front end ratio of more than 30%, usually 29 to 30%. Yes, on those rare occasions, you can, you know, exceed those guidelines, but those scenarios are few and far between. So for most of us, you're going to be using 29 to 30% for that front end ratio. Okay. Your housing payment cannot go over your front end ratio, which is at 30%. Whereas Freddie Mac does not have a front end ratio. Your housing payment can be whatever it is, because there is no housing ratio on Freddie Mac loans. This is the second reason why I feel that Freddie Macs are just superior to FHA for those of us with high student loan balances. Reason number 3. Let's talk about the upfront MIP. Whenever you do an FHA loan, you have to, not only will you pay mortgage insurance monthly, you will pay an upfront mortgage insurance premium, okay? Your upfront MIP is 1.75% of your loan amount, okay? You have to pay this 1.75% upfront mortgage insurance premium, as well as you have to pay monthly mortgage insurance on an FHA loan, okay? A lot of people, that 1.75% has to either be financed, meaning rolled into your loan, or you're going to have to pay it upfront cash at closing. A lot of people just choose to finance that 1.75% into their loan so they don't have to bring that much more cash to the table. But just realize that if you're putting down 3.5%, the minimum, if you're putting down 3.5% on an FHA loan, and then you're going to turn around and finance 1.75%, you're only putting 1.75% down. That took out half of your down payment. You don't have upfront MIP on a Freddie Mac loan. Let me say that again. You do not have upfront MIP on a Freddie Mac loan. This is reasons number 3 why I feel that the Freddie Mac loan is superior to the FHA loan for those of us with high student loans. Okay, reason number 4, which I feel personally this probably should have been reason number 1 or something like that. But anyway, reason number 4. I talked about in the last segment, I talked about that mortgage insurance premium. You on an FHA loan, you will pay that monthly mortgage insurance premium for the life of that loan. For as long as you have that loan, 5 years, 10 years, 30 years, whatever it is, no matter how much you pay down that mortgage, you will always have that monthly mortgage insurance premium to be paid. This is an FHA rule. It used to be on FHAs, just like we have on the conventional side. Once you pay down below 80% loan to value, the mortgage insurance premium goes away. But on FHA now, nope, that mortgage insurance premium stays on that loan for as long as you have that loan. So again, you're going to be making that payment. Let's say your mortgage insurance premium is $200 a month. Okay, so now you're paying $2,400 a year extra, and it's not going towards the balance. It's not for you. Remember, mortgage insurance is not for you. It's for the lender. That just guarantees that the lender will get their money back if you were to default, if you were to stop making that payment, if you were to get foreclosed on. That is insurance for the lender. It does nothing for you. So on that FHA loan, you're going to be paying that $200 or however much it is. You're going to be paying that for the life of the loan. You're talking about $2,400 a year times 10 years, 15 years, 30 years. I don't know. However long you hold that loan. Whereas on an Freddie Mac loan, on your conventional loans, when you get to 80% loan to value, meaning you've paid that house down to where it's 80% loan to value, at that point you can ask the lender if your mortgage insurance can be removed. When you get to 78% loan to value, you have paid that bad boy down and you only have 78% loan to value, it will automatically be removed. Automatically on your conventional loans. And the lender will tell you on what date you will reach 80% and on what date you will reach 78%. At the 80%, you can request it. Okay. A lot of times you're going to have to get a new appraisal and everything. But hey, it may be worth it because you're getting ready to get rid of, let's say $200 a month again on PMI. It's very much worth it to pay for an appraisal to get that PMI removed so you don't have to pay it anymore. But regardless, if you forget the 80% date or you don't ask for it to be removed, it's going to be removed at 78% automatically. Whereas on the FHA loan, you got that for life. Hey, it's right. PMI is your ride or die on an FHA loan. It's going to ride until that loan dies. So that's reason number 4 why I feel that the Freddie Mac loan is much better for us student loan borrowers. And finally, reason number 5 why I feel Freddie Mac is still superior to FHA for us student loan borrowers is because, remember now, on FHA, you got the 2 ratios. You got the front end ratio, your 29 to 30%, that's your housing payment. And then you got a back end ratio of normally 41%. Normally, FHA don't like for you to go over 45% DTI, that back end ratio, your housing plus all your debts. okay? On your Freddie Macs, they go up to a 50% DTI. So you got a lot more room in that DTI. You got a lot more debt that you can deal with on a Freddie Mac loan as opposed to an FHA loan, okay? So even though, you know, as of August, the FHA is going to start counting, you know, less money towards your DTI on your student loans, you still have more room in the DTI in the debt to income ratio on a Freddie Mac loan than you do for a FHA loan. Again, my name is Rhonda Burgess, and I'm a real estate broker and mortgage underwriter here in the Nashville, Tennessee area. If this video has helped you and it's your first time checking out the channel, please consider subscribing. Give the video a thumbs up and share it with people. You know you got friends and family who could use this information because they're trying to achieve home ownership, and just let them know, hey, check out this video. This may help you, so you know which type of loan you need to be looking at off the rip, and save yourself a lot of time and trouble. Again, if you need to reach me, my phone number is 615-554-0832. Thank you, and as always, have a blessed day.